Day zero template. Very powerful signal day that we can implement into our day trading. And a fantastic opportunity arose from a day zero setup for the NAS 100 today. And let's get into that chart. So we've got a peak formation high. Essentially, in simplistic terms, this is a barroom brawl between the bulls and the bears coming out of 2 days of fake outs. Bearish versus bullish. It could be the other way around, bullish versus bearish. And then coming into this day here, the day zero, because we've got no one in control, essentially, to some extent at least. Certainly we don't have a day count, right? There is zero day count. Neither the bears are breaking down nor the bulls breaking up beyond a high or a low. Okay, so over here on Tuesday, the bulls broke out, the bears took over, but they failed to get back down to the other side of the previous day's lows. Yes, we closed back inside of the highs, but the bulls stepped in before the bears could carry on with their onslaught through the range of that day, and they were taken back in their stride by the bulls coming in exactly the same fashion. So the bears were met by the bulls, and this created the market moving sideways into a day zero phenomenon. So fake out high meets fake out low, and the bears and bulls are in a barroom brawl. Who's going to come out on top? We don't know, but we assume whomever is breaking territories. So in this instance, the fake out low stands so long as the bulls stay above the fake out level, which is the prior day's low, i.e. the breakdown level. So breakdown level turns fake out low level support. So the bulls get through that resistance, presumably turns to support, and we assume the continuation up. So fake out high is met by a fake out low. This forces the market sideways. So day one shorts minus day one longs equals zero, day zero. The bias remains with whichever side is breaking territory. So there's the territory for the bulls to stay above, and the bears are being pushed back. If the bears are going to take control, they need to be below, first of all, the breakout level over here. But not only that, they need to push the bulls back below, back to where they came from, right? So back below the lows of that day. Okay, so the bulls are in charge at this point. So some might argue, but if the price is still below the breakout level, then surely the bears have a say in this as well. Well, that is true, but it's like pass the baton. So the bears failed. If you look at it that way, that the bears failed to stay below the lows of the day that was the fake out high. So day one shorts, they failed to stay below, and the price closed back above. So really the line in the sand flips from being the breakout level turned fake out high level to all about being whether or not the price stays below the low of that day. It broke down and failed to stay below that low. Therefore, it's handing it over to the bulls now. So the bulls are in charge at this point, and let's see what they can do. So they've passed the baton. The bears have passed the baton to the bulls. Okay, so we get this coil, and out of that coil, the energy's building for a breakout. It doesn't have to, but that's the thesis. Coiling markets at some point going to break out, and then we break out. Okay, so we break out there in the open of Frankfurt, and unlucky for the bulls in the London Open, because they don't get a crack at the whip, unfortunately. We turn into a correction. So 3 major drives down, 1, 2, 3, coiling sideways, working the low of the day, well, at least of the second part of the European session. The highs of the prior day, as it were. All of this is support. The London highs, the New York highs, the high of that day, and then the Asian lows, the Asian highs. All right, so working into that as a support base, essentially the breakout level. And we get this strong move up, which is the initiation of the bigger move. But this was a early trap for New York, so a late European session run on stops, and then we get the dump, and that dump is met by a strong, robust breakout, which we wait patiently for our entry in the dump and pump scenario. But that is day 0. And then it's all about timing. So this is why I choose to trade from 10 a.m. onwards. I avoid these stop hunts, the pre-market activity, the data, and all of that volatility, waiting patiently for the dust to settle, Wall Street volume to come in, creating an opening range, and then trading the opening range breakout. Being patient, presuming that there's not enough trapped volume for the move. It's already had a very strong move. Coming back in to pick up some ammunition to take it on into the high of the current week, new all-time highs, and a beautiful trade in a 100% range expansion of the opening range. Now, to go and look up these templates, quite simply, you can go to a daily chart and just look for the opposing fake out highs and lows. So fake out high, usually in the form of a strong wick, fake out low. So 2 adjacent wicks in opposing trajectories, squeeze, so like a sandwich. Yeah, being sandwiched down, being sandwiched up, squeezing it out for the explosion one way or the other, depending on the levels, depending on being above the previous day's low in this case, or below the, so there's the low. Yeah, so low and high. So you've got 4 candles really in play here. So you've got the day that you're trading, and then you count back 3. So the prior day, what's it doing? Is it above the previous day's low? And what's the previous day doing? Is it below the fake out high level or the high of the previous day? All right, so you count back 4 candles, 1, 2, 3, 4, and you can go and back test that. There's a scenario here. You've got the wick and the wick above the low of that fake out high candle, above that low, bullish, below it, bearish, essentially in that situation. And there are variations of the templates. I mean, here's one here. Here's one that just didn't work out at all. Peak formation high, peak formation low. So we're in anticipation of a coil and then continuation up. But instead, it breaks the breakdown level again and puts the bears back in control. So day 1, day 2, day 3. And anything below here is a sell setup. So there we have a sell setup in the afternoon. Let's have a look at this. Looks closing back inside. Breakdown closing back inside. And here's one. This is a parabolic channel. So instead of the coil, we get a channel. So bullish above the breakdown level. Peak formation high, peak formation low. Both have closed back inside. The bulls are in charge so long as we are above the level. And here we go over here for a beautiful 10 a.m. continuation out. So if you just go over your charts looking for these peak formation high, peak formation low, essentially fake out high versus fake out low across the assets that you trade. I'm not going to go spend too much time looking for them here, but they exist. Far and few between, but they are around. They are around. You'll spot one at least once a week across your watch list. Okay. Let's have a look at gold, because I believe gold was setting up as a day 0. So when you come into your next trading day, these are the things to look out for. How is the day set up? How is the week set up? The template. So here we have a day 0, as expected. The peak formation high versus a peak formation low. Coiling sideways into Asia. Nice coil there. Or we get an explosive move perhaps out of Asia. Looks like we're already starting to hear the very start of Asia. So bulls are in control so long as we stay above the level, which is all the way down here in this case. And then looking left, we've got the value area high of the day that's just closed. So bullish above that. We got the highs of last week as a target. But it's not the best engineered chart. We've got an inside session here in New York. Could pull the price back in to the lows. But all in all, it's a day 0 template coil, prospects of a retest of the highs of yesterday in the near term. Okay, that brings us to a closure of what is a day 0.